and started from the small grind, turned it up major. I remember all the hard times, that's what made me greater. Done departed from the haters, got no time, see you later. Always finish what I started, that's what I call major. No, I'm major.
Yeah. What's this? Let's Save Together, episode 8?
Number 8.
Numero 8.
We just dropped the Discord today. It's crazy how we did a video today. We're like, man, hopefully we get some people to join before we record the episode, and the whole free is full.
Yeah.
So,
I mean, I kind of told Steve it was going to happen. He's like, no, I don't think 25 people are going to sign. I'm like, bro, I had a Discord around 3 years ago during COVID. We made some good money in that one too. But now this one is just like a whole nother level. Because, we're a lot smarter 3 years later, so a lot sharper with everything we do and a little more focused than what we were before.
Something you were just saying before we got on camera is like, this is like the culmination of 8 years of your life, but the past couple weeks you really like perfected, like the implied volatility and just like the call debit spread. You really mastered it just the past couple weeks.
I mean,
and now
this is
we're about
a strategy
to give this to
I've
people.
been working on for years. Yeah, I mean, I've been out of school for 8 years. It's been a strategy I've been working on for a very long time. Many different strategies, but
you'd already be the fuck out of here if you already had it figured out. So you guys are here with us on the journey.
I would be on the beach somewhere with a few ladies having some margaritas, at least at bare minimum. But nonetheless, let's dive right into it.
We know Biden might be on the beach or something.
Well, I mean, Biden's definitely dropped out of the race, right? So I think he might go to the beach and have some margaritas.
He might be there right now. Who
knows?
Yeah.
I mean, God bless our president. I hope he recovers from COVID, and as well, I wish him luck on his new life, because he's obviously dropped out the presidential race, and he's left it up to Kamala Harris and the rest of the Democratic Party. But
at the end of the day, it don't matter who's president. You're gonna still have to save. You're gonna still have to invest.
You're gonna still have to make money. But it looks like Trump's a clear winner. Chicken dinner.
Literally. Even in the Discord, we're going to have a lot of winners, man. We about to really break down today, even now, just like the benefits of being in the group. There's a lot of people already in there who've just been like communicating and talking. Retire on Dividends is in there. Shout out to you, man.
Yeah, shout out Retire on Dividends.
A lot of respect for that guy, and just to have him in there is like a big dog that we look up to. Being one of the first 25 people is cool. And we're going to have a lot of different plays for you guys to do. You guys are going to be able to track like what we're both getting paid in dividends every month. Just being able to talk to people who are kind of in the same spot, or maybe a little bit higher up or underneath, and we can all learn from each other. So I think that's like the most exciting part.
I mean, the Discord is off and running. There's more than 25 people in there. We have a few paid guests already, so that's cool. You have about 75 more spots before the price goes up again. The price for these next 75 spots are going to be $24.99. So after those 75 spots are filled, the price will go up to $29.99 for the next 100 people. We're going to cap the Discord off at 600 people. So it's pretty much the first 600 that gets in there. That's who we're going to be working with for the foreseeable future. We might reopen the Discord somewhere down the line, but for right now, we're only going to take on what we feel like we can handle.
And we might even cap it at like 200 just to kind of get whoever's in
for
there
the first 200,
and then push it up. Just so we like everybody who's in there, we want to really like communicate with all you guys. Make sure you're getting the value, like get to know you guys. So it's like pretty cool to just even be here and to be able to get this to a point. And we're about to kick off earnings season. Like this is like the greatest time.
I mean, earnings season, it's coming.
It's already kind of kicked off.
It's already kicked off. We have Tesla tomorrow. Tesla, Google, and then we have Chipotle next day. As you can see, Tesla and tsla are off to the races again. Like the implied volatility on Tesla right now is 5% either direction, so that's pretty good. Yeah. And then on tsla, since it's a 2x, the implied volatility is roughly around 10% in either direction.
So now, what is the implied volatility, Tone? Just really break it down. Textbook. Break it down.
Textbook.
Break it down.
I'll give
you
your
own way.
Investopedia definition, so you can refer back to it and know that and I know what we're talking about. So this refers to a metric that captures the market's view of the likelihood of future changes in a given security price. So what does that mean? It means the implied volatility can be used to project future moves into the stock price. So how do you find that? That's the real question, because I mean, he's like, hey, implied volatility tells you what the stock is going to do during earnings. And it's like, that's cool. Like, you can get that. But how do you really find that? So really what you want to do is you want to go to the option chain, and that first call that's out the money where it says break even 5.1%, that's going to be your implied volatility on the upside. Then if you go to the put side and they say the first put out the money, it says break even's 5.2%, that's going to be your implied volatility on the bottom. This is as simplistic as I can make it for you. So I would say just review the clip over and over. It's very simplistic. The IV will help you determine which way the stock is going to move. Now, with implied volatility, this is essentially what the writers of the contract are telling you that the market's going to move, how the market's feeling, how the market's moving.
It's almost like supply and demand within the market.
Yes, exactly. So, you know, on some earnings reports, you're going to have earnings where some stocks, the implied volatility is 7%, 8%, 9%, 6%. We're going to teach you how to create moves within that implied volatility. And you're only going to get that action in the Discord. So I highly suggest, if you want to learn called Debit Spreads and you want to make money immediately, sign up for the Discord, because we're going to be betting Tesla this week, and we're also going to be betting Chipotle. And from the looks of it, it looks like a winner chicken dinner. So.
And like we said, we're going to always give the game here to you guys. Like, we're going to tell you what we're doing. We're going to give you value. You're never going to have to pay to save the time and money with us, but to be directly connected and to actually see like what we're doing, you're just going to have pay that small little monthly premium. And not only with the call Debit Spreads and the IV, but also just the invest ethics we already give out for free. That's just, you can go on our website, you can go right on our Instagram in a pinned post, and you can just see it's mainly with options, but also about investing, just like how we got rule number 4 of, like, you know, playing 70-30, which is something that's just as important as the implied volatility.
The 70-30, I mean, if you're going to be playing these earnings season with us, we always suggest you cover your ass, because sometimes you think a stock's going to erupt, and then what it does, gets clapped. And then sometimes you think a stock's going to get clapped, and what it does, straight full-blown rally mode, and you're just like, damn, what the hell? So you don't want to get caught on one side. It's happened to us in plenty of earning seasons. We regret not playing our 70-30 rules on some events, and this is why we highlight the 70-30 rule, because these are rules that we designed for ourselves to keep ourselves safe. So trust me when I tell you that these rules are going to keep you safe. And keeping you safe is our number one priority, and making you money is our number one priority. So these are things that we've learned with time, and we've learned losing hundreds of thousands of dollars and also making hundreds of thousands of dollars. This isn't you know, this isn't free money, but this is probably going to be as close to free money as you can get. And it's like nothing's a guarantee.
Yeah,
just know that.
I mean, we had to look at every lesson like that we learned through losing as a blessing, like invest ethic number 6, like, because if we were like, dang, well, even somebody asked this to us and was like, how would you like explain having to lose in trading? It's like, well, the only way you're going to know what not to do is
by losing.
If you lose first.
Like I would say, the more you lose, the more you're going to know what not to do. You're like, because who the hell wants to lose money when they're trading? Nobody.
The only thing we don't want you to do is to not, well, you shouldn't be putting up what you're not comfortable losing. Rule number 5. Like,
don't
just put up because
you're
like, yo,
bet your life savings on Tesla Wednesday and then be mad if it doesn't work out.
You're going to follow every trade with us, guys, like within this group. Like, I think it's pretty fair to say, people, like, you know, regardless, you know, take out the monthly fee, you're going to need $1,000 to roughly like really get in the trades.
I mean,
to play both sides with us.
Like I like options. I always tell Steve, it's not about the money, it's about the trade. You can turn $500 to $1,000 and turn $1,000 to 2 or 3, and then you can be off to the races, right? Or maybe you start off with a little more. You spend 1 or 2, and then after two trades, you're up 6, 7, 8 grand, right? It kind of all depends on what your budget is. But make a long story short, I'm going to structure the best possible trade that I see for the Discord, and I'm going to put it in the chat. So everyone who's in the Discord, you're going to have a very well structured play that I'm investing my hard work and money in, and Steve's investing his hard work and money in. So you're going to be in good company, and I'm telling you, we're going to catch some really good winners And if you're a part of this journey here, this is going to be awesome. Shout out to the first 25 people who really got in there, because anyone that knows me for options or just knows me for numbers or investing knows that, I get pretty hot at times. And these new rules that we've designed they were created to keep us in check.
We finally are at the point where we mastered and crafted all the rules and the ways we want to conduct ourselves. And this is honestly like the first test, we would say, with all of the knowledge that we've gained. So you 25 people that are in there, like Tone said, like, we thank you guys. Like, we believe you're very lucky to be in there. There's going to be a lot of other people that join, and we're going to give you everything on a platter. Here you go.
I mean, the Discord is going to be the testament for how long this podcast goes on. honestly and chances are, with the dedication me and Steve have towards finance and just towards investing and towards trading and towards options and towards futures and towards any kind of financial instrument you can think of, this is what we have to offer.
Yep.
And we're gonna give you our hard work. We're gonna give you our blood, sweat, and tears in this Discord, and we're gonna do better than most.
So let's really break down like where we're even thinking, because if you're, like we said, if you're in the Discord tomorrow, you're gonna see where we're playing Tesla. But and
so
then
let's
even
just jump into Tesla, right?
Yeah, let's see what's
up.
All
right, so we were just talking about Tesla. It has a 5% implied volatility move, right? So Tesla is around 249 right now, right? So if the implied move is 5% up or 5% down, what does that essentially mean? That means that Tesla, after earnings, is going to move up $12 or move down $12. Could it move more than $12? Of course. Could it move less than $12? Of course. But you have to understand that the implied volatility is like a baseline of what the stock is going to do and what the sellers of the contracts are implying that the market is going to do. So when you have implied volatility of 5% and the stock price is $249, you multiply the 5% of the 249, you're going to get roughly around $12 and change. So I'm telling you, it's not like I have a crystal ball or anything.
Huh.
The stock is going to move $12 north of $12 south. So that's just there. And then TSL, which is our 2X. TSL, it's around 14.10 right now. So a 10% implied move going up or down. The stock is probably going to move about $1.40, $1.35. Going up or going down. So you pretty much have those numbers right there. That's going to be numbers that you can look at back on the YouTube channel, and we'll probably make that for a few clips, but that's what's pretty much going on with Tesla.
I mean, and honestly,
you got to expect the move. It's going to happen.
I mean, it's going to move either way. I mean, what we're probably going to aim for is for it to go up, just based on what's been happening with them.
70-30, yeah, we're going to bet 70% up and 30% down. Yeah. The 70-30 rule, the reason we say bet 70-30 is because we could be expecting, Tesla to move up considerably higher, right? But what if Elon goes up and he pushes back the robo-taxis again? Or what if the numbers that come out for deliveries aren't as strong as Wall Street expected? These are things that can make the stock collapse because it's a very volatile stock, right? So that 30% is going to be in there to either do two things. Either make you a small profit on the trade or break you even on the trade. Now, if it goes up and we have 70% going up and it bangs out on the upside and starts to rally, guess what? That 70% is going to be a good amount. Yeah. You're probably going to get a 200% return on those, around 180%, 200% return. So you probably get a triple up on those going to the upside. So classic example, I'll say you're betting 1,000. Betting 70% up, 700 up, 300 down. If it does bang down, that $300 probably be roughly around $1,000. Maybe give or take $100. And then if it's bangs out to the upside, that $700 will probably be anywhere from $1,750 to around $2,000. So you'll probably generate a 60-70% return. Like typically with these plays, I like to aim for a 50% return, total return. So sometimes the plays do better, sometimes they underperform, sometimes they overperform. But
nobody's perfect.
Yeah, nobody's perfect. But if you stick to the 70-30 strategy and you stick to these plays that we're going to be putting in the Discord and showing you exactly what we're doing, you're going to make some money.
And I think even with Tesla, how we're betting it on the up, I'm extremely more confident on Chipotle. Just where they've been at.
They've been down. Chipotle looks good.
They're down 20%.
They're getting clapped.
Yep. I think the past month down 20%, getting clipped. Plus the whole controversy with the portions has really just like took the rise this past quarter, these past couple months. So I think they're gonna smack that through the water. And they still made all this money even after all that.
I was telling you inside the house. I was telling you inside the house before the podcast started that I think Chipotle is going to be.
That's the bang of the week. That's the bang of the week.
Yeah, it might be a bang out because the implied volatility is only around 4.7% in either direction. But it's like Chipotle's so down and just so messed up right now. It's like, I wouldn't be surprised if Chipotle goes from like 53 up to the high 50s again, or even gets close to 60.
Yeah.
Like I could see Chipotle going up 10%. Because it's just down so much. But I mean, nonetheless, the implied is only around 4.7%, so roughly 5% up or down. So you could look for like a good $2 move.
Yeah. And we're still gonna play it, regardless if we're like.
And like we're gonna play it with
99% confident it's going up. We're still playing the 70-30. Yeah. We have to abide by the rules that we wrote ourselves, and we're gonna give it to you guys. We definitely don't want to lose our money, but we damn sure don't want to lose yours. So this heightened us to think about ourselves beyond ourselves, if that makes sense. Yeah. You know, we look at it like, if we got people following us, like we got to really take a secured path. And for ourselves too, so we're gonna do that.
I mean, honestly, like we had to tighten up the belt, right? Like what happened before the podcast started? I lost like $5,000 on two silly trades by not respecting the 70-30 rule. So these are rules where they're designed to keep you safe. They're designed to mitigate risk. So like when you're in a losing trade, you don't lose that much, but when you're in a winning trade, you're gonna make out very well. So just. The best thing I could do is watch the clips, watch the reels, watch the YouTube videos, sign up for the Discord, meet some people in the Discord. Like, surround yourself with people that are thinking like you and people that are trying to do things that you're trying to do
better, yeah. I think this is a great time to go into the correlation of the IV, the implied volatility, and the call debit spreads versus the nakeds. Like you were explaining to me in there a little bit, just like... I think this would be like good because we kind of touched on it today, like just of how, hey, the implied volatility is say 5%, and what's the pro of doing the call debit spread versus the naked.
Okay, all right. So let's have a real live example here. So at least when we're talking to people can like look this up and be like, oh, I get what he's trying to say here.
Yeah, I think that's
I
superb.
get what's going on, right?
I think that is superb.
So like right now, if you go to TSLL, right, and you go to the July 26
I'm gonna do it with you. Go on.
Contracts, right? The contracts that expire this Friday, right? If you go in, right, you can immediately go in and see, right? The stock is trading at 1436, right? If you go to the 1450 calls, right?
1450, okay.
Yep. You see the break even is 9.7%, right? So pretty much 10%, right?
Yep.
So what is that saying? That's saying that the stock's going to go up 10%. Or it can go down 10%, right? So 10% of a $14 stock is $1.40, right? So you know it's going to go up $1.40 up or $1.40 down.
Yeah.
Now, but what do you also notice about this 1450 call? It's that they cost $125. They cost $125, right?
Yep.
So they cost $125. So if you bought that right now, $125, and earnings reported, right? It would have to get up to $15.75 for you to break even. You don't even make money on it.
No, yeah. So it would literally have to get
so the naked, you're not going to make money on it. Even if you buy it right now, right? And it goes up to 5%, it says. And let's say it magically just cuts off at 5%.
The 10%, but
yeah. It's only, the 10%. It's only going to go up. It's only going to go up like a few bucks because it's already priced in. The move is priced in, right? But now if you go and you buy a 1450 and you sell a $16 call, right? You can get in there for $55. You get a $1.50 spread for $55. So if it goes above $16, Guess what? You make $150 off of $55. So what's that? Almost 200% return. But if you bought the $1.25 and it went up to 16, you will only make a 20% return. So which one sounds better? The call debit that's going to make you 180% return, or the naked call that's going to make you 20-30% return with way more risk?
Yeah, literally the spread. I guess it's for them people that are just so greedy, or maybe we shouldn't even say greedy.
No, I wouldn't say
believe,
greedy.
Yeah, they believe it's going to go so much.
Comprehension.
Yeah,
doesn't have the full understanding of how options
like
are valued.
Like the guy that his name was Spreads telling you.
Oh yeah,
how
the
nakeds were better. But he has
he was just giving me a textbook definition, like, hey, naked calls give you unlimited potentials, right? Like unlimited win potential, right? I'm like, guy, thank you for the textbook definition, but that's not really how it's gonna apply in real life, you know?
The stock isn't shooting up 40-50%. Like, let's be real. Like, so, you're not maxing it out.
Like, let's be honest. Like, I'm sure we can all agree that as a podcast, that sometimes we read something on paper and it's like, oh, that sounds good. But then we try to apply that in real life, and it doesn't work quite the same, right?
No.
So respect the definitions in the textbooks, but also learn how to apply it to the real world first before you speak out loud, because that's very important.
Dang.
So,
and best ethics number 9, think before you speak.
Yep.
Double check all information, man.
Exactly. So naked calls when it comes to earning seasons are a big no. That's a big red flag. You're going to lose money, because think about it. If you're buying a $14.50 call on Tesla and it's going to go up 10% and they're charging you $1.25 for it, which prices in the 10%, where's your money to be made? Now, if you even dig even further, if you buy a $14 put for $1.25 and then you buy a $14.50 call for $1.25, then you're in for $2.50. So now the stock has to go above 17 on the upside, $2.50 plus the 14.5. Or it has to go down below 11.50, which is 14 minus the 250. A lot of numbers, but for people who are watching, take your time. Make a long story short, the naked calls, naked puts for earnings are not good unless they are super duper cheap. If they are expensive, it's not really worth it. And more importantly, you can take advantage of buying spreads within the implied volatility move. So if the stock is implied move is 10%, which is a $1.40 move, why not structure a call debit spread that calculates a $1.50 move? So if it moves $1.40, you're pretty much in the money. You're already banked out. You don't even got to worry about what the stock is doing later. You're ready. As soon as the market open, I'm taking my money. I'm out of there.
Yep.
And that's how we're going to structure our call debits and our put credit spreads. Discord. It's going to save you a lot of time.
It's right in the link too
game,
below, man. Right in the
and
description.
I have a lot of people, a lot of friends that are in finance in this Discord that will be more than happy to share their knowledge with you for free $99. Well, I mean, at least for the first 25 people.
Yeah.
For the
next
next people, it's costing them a couple $, but it's still
you're still getting that knowledge in there. Also,
yeah,
you know,
yeah, like you're getting in for a drink, for like a drink tax and tip for me.
Yeah, you're just paying for one drink.
Yeah, you just
and maybe
just
an
buy
appetizer.
me a drink every month. Yeah.
Honestly, like I mean, it's really both of us. So it's basically like a drink apiece. You know, you can go a lot of places on the internet and get a lot of information. You know, like some people will say this, some say that. That's the greatest part. Not only about the world, but definitely America, of like you can hear different beliefs and hear what different people got to say, then you can use your judgment to determine what you want to do. This is what me and Tony believe to be the best and what we want to do. Again, like we are not financial advisors. Like we want everyone to do their own research.
I am no longer a financial advisor, yes.
And, you know, we just really want everyone to, like, you know, take what we're saying with a grain of salt. Please look it up for yourself and know about it, know what you're doing. And if you want to follow us, cool.
I mean, please research everything I say. I'm more than likely sure that everything I say, it's highly accurate. And
we can't determine the ways of which things are going to go.
Oh, but, yeah, like there's no way of determining. Like I don't have a crystal ball here. You know what I mean? Yeah. What I do have is years of experience trading futures, options, and every financial instrument under the sun. And you know, along with my beautiful finance degree from Temple, and you know, a lot of years of trading, a lot of years of making money, a lot of years of losing money, a lot of years of every kind of feeling, and just a lot of everything.
Yeah.
Which is, I think, is beneficial for you as beginners. And even if we have some advanced or intermediate people that, make money off call options, we're going to teach you how to make money off call debit spreads.
Yep.
And once you understand that, you understand why that's so crucial for building long-term portfolios, you're going to immediately fall in love. If you like long-term leaps, this is probably going to be a good channel for you, because we teach you how to long-term leap with call debit spreads.
Which we didn't even get into the long-term leaps.
Yeah,
but
those
it's like
are
essentially
extremely
that's just
advantageous.
The same thing we're talking about, just a further time out. Now we're giving ourselves more time to make the money, and we're not giving ourselves so much pressure like we are during earning season. But we're not really going to feel the pressure because of rule number 4, when we go in 70-30. And this would probably be a great time to just go in the invest ethics, because we did that the first episode, but we have this in our brain like nothing, we believe in this. We build our long-term positions, and we're not selling out to do options. So whatever we have, we're putting new money in to do the options. Our income's invested first, we pay our bills second. We know how to budget that. We encourage you guys to do that for yourselves too. When things are going really good for us, we curb our enthusiasm, and when they're going bad, we just chill because we know why we're here. And
I could tell you number 4 because I created it myself from a lot of hard work. 70-30. 70-30. Doesn't matter how smart you think you are. I don't care if your brother's the best analyst in the world. I don't care if your dad works at Goldman Sachs. None of that's going to apply here. If you're playing earning season, there's no way of you getting your hands on that quarterly report before it's reported on. If you do,
good for you. What's up? Where are you at?
You might go to jail, but high probability.
We don't want to know where you're at. And then, don't
just
bet
play it safe, man.
Then don't bet on options what you aren't comfortable losing. You should already be okay with losing what you put up. You know what? The stock didn't move either way. It just stayed right here. You know what? I lost out, but I didn't bet what I wasn't comfortable with. We looked at every lesson as a blessing the whole way. No matter what, you know what? Maybe I didn't stick to the rules. I'm not gonna beat myself up about it. I'm gonna take the lesson out of it, and I'm gonna just keep moving forward.
And jump right into number 7 because it's it's my alley. Look at futures to determine market sentiment. Sometimes you'll wake up and you hear, oh, the Dow Jones is down 400 points. Oh, the S&P 500 is down 70 points. Oh, the NASDAQ is down 300 points. When the market is down and the market's selling out, bro, it's selling out. Everything's selling out. It doesn't matter what people are telling you. Everything is selling out. Now, it's up to you on those big red days whether you're going to pull out your wallet and buy some more stocks or you're going to sell and fear like a lot of people do. Most people that I know that are really, really smart people, when these red days come, they were pulling out their wallet and they're buying more. And then, sometimes you're going to wake up and the Dow Jones is up 400 or 500 points. So the S&P 500 is up 60, 70 points. The NASDAQ's up 250. These are days where the market's probably going to stay hot all day, unless there's a major sell-off throughout the day.
Yeah.
But, always look at the futures market just to determine market sentiment and see what's going on the field.
And then really, we're going to think before we speak and double-check all our information. There was a time when I thought there was a certain earnings on a certain date, and they winded up moving it. Was it really my fault? It said it on NASDAQ, but they just so happened to move it. So just do that one extra step to check everything, not even just with the finance of life. You want to know what you're talking about. When you ruin your credibility with your mouth and your words, it's kind of hard to get that back. So
it's true. Once you say something that doesn't make sense,
totally out of line, and you're like, wow, what are you
it's
doing?
Like imagine me coming up here doing podcasts and I'm telling you about things I don't know.
Or we're telling you to invest, and it's like, how much is your portfolio worth, Steve? Well, I haven't invested anything yet, but I'm just telling people to.
Yeah.
It's like you got to practice what you preach and think before you speak, man. That's a bar.
And it's if you're passing along information, please have all your verified sources with you.
Yeah, we do. We cite everything down in the bio.
We cite everything from Bank of America, the Goldman Sachs, the Investopedia, the CNBC,
everything,
the NASDAQ. We cite everything. So everything that's coming out our mouths are pretty highly that it's accurate.
We're making decisions. Accurate. We're making decisions based on our own beliefs. That's really the last one. We've touched that all the time. Do your own research. Believe and love in what you're investing in and what you're speaking. And honestly, we're gonna see you guys in the Discord. The results from Tesla and what we do, the trades are gonna be in the Discord for you guys. Of course, the podcast on Wednesday will be able to kind of tell you guys, the results, and even of Chipotle, and you'll see that on Thursday. But the Discord is going to have everything.
Yeah, man. It's either going to be a winner chicken dinner or a break-even Steven. You know what I mean? And Yeah, like when we're doing these spreads, the 70-30, like we're obviously trying to make money on the 70 side. If the 30 side ends up, saving us, breaking even on the trade, or making sure we leave with a small loss, or even sometimes with a big gain, depending on how it swings, we're gonna make sure that everything's structured properly.
Yeah.
So for the most part, we're designing plays to have you make plus 50% on the move, and for you to break even or be down 10 to 15%.
Yep. And we gonna see you guys on Thursday really, but check us out in the Discord. The link is right there in the bio, man. We hope to see you all there.
$24.99 now for the next 75 people. Don't miss those spots, because I mean, honestly, they're filling up faster than we thought, and even though there's, I think, 750, maybe 800 followers on Instagram.
Yeah, no,
those are like pure followers. Those are like real organic, know. So, everything's picking up pretty fast. The subscription growth on the YouTube's picking up. The Instagram views are picking up. The views on all the videos are in the 4, 5, 6, 7,000 range already. So, thank you for the support. We're gonna keep it going, and we're gonna supply you with a lot more financial information, and we're gonna make sure everything clicks.
Peace.